Investing for Beginners in Canada, Part 2. On our last video in this series, we talked about all the things you needed to know and think about prior to investing that very first dollar. Today, we're going to go over your options for investing, some things to consider, and how to make that very first trade. Stick around and we'll let you know how to do it.
We are also going to show you how easy it is for you to start investing. And at the end of this video, there is going to be a bonus to share with you. As we always say, we are not financial advisors, we are not financial planners or anything like this. We are just a couple living in Toronto, sharing our journey to financial independence. In 2024, we will be stop working because at that time we are going to become financially independent, meaning that you are in control of our time, you are in control of our money, we can do almost everything that we want. By the way, Christine said that I forgot to introduce ourselves. This is Christine, my name is Gian, we do live in Canada, and 2024 is our fire date.
So just really quickly, a recap from the previous video. If you haven't seen it, take a look at that one prior to watching this one. But here we go. So you need to decide on which platform you want to invest in, whether that's a bank, a DIY investment, a wealth management group. You have to decide on the type of account that you want to open in order to start your investments, RRSPs, LIRAs, TFSAs, those types of things. You need to decide on your investment goals. Do you have short-term or long-term investment goals? And you need to assess your risk tolerance. Are you a very conservative investor or are you willing to take lots of risk? Those are all things that you need to know and decide prior to investing one single dollar.
And by the time that you figure all out, it's time for you to start investing. But honestly, it's overwhelming. And what we are going to try to do today is to simplify as much as we can with the things that you definitely need to take a look before you start investing. Realize there are a lot of things to learn. It's just a journey that you are starting now. And at the end, you are going to be in control of your money. This is really important.
So before we begin, we're going to go over several definitions. And in those definitions, the word securities tends to be in almost every single one. So we wanted to talk very quickly about what a security is. So up on your screen is the definition of a security from Investopedia.com. A security is a fungible, negotiable financial instrument that holds some type of monetary value. It represents an ownership position in a publicly traded corporation via stock, a creditor relationship with a governmental body, or a corporation represented by owning that entity's bond or rights to ownership as represented by an option. Basically, it's talking about a little piece of either a company or an ETF or a bond that you're now going to own.
Since you know what a security is, now it's time for you to decide what kind of investments are we gonna have. We are gonna cover most of them, and the ones that we are not familiar nor we invest, it's not included on this video. The first one is an ETF, which stands for an exchange traded fund. And what the hell is that? An exchange traded fund or an ETF, it's a basket of securities where each security is basically a company that you are investing. For example, if you wanted to buy all the companies in Canada, you can buy those companies individually, or what it makes more sense, you can buy an ETF which holds all of those companies within the same basket.
Yeah, it's way cheaper than owning every company in Canada.
You still want to have fun, and if you start buying all the companies available in the stock market, you are not going to do anything.
Yeah. So the next one is mutual funds. They're very similar to an ETF where they hold a basket of securities. So you have multiple different companies inside a mutual fund. The difference is that sometimes with mutual funds, you need a minimum amount to invest in these. Quite often they're sold through banks or investment companies. And there are a few differences that we need to point out between a mutual fund and an ETF.
So I'm glad that you brought that up, and this is exactly the kind of question that we had initially. Well, if an ETF is a basket of securities and if a mutual fund is also a basket of securities, what is the difference between them? We are going to focus on three of them that we see as the most important. The first one is an ETF they trade during the day, while a mutual fund can only be purchased at the end of the day.
Next one is the MER. MER stands for Management Expense Ratio, and this is where a lot of it differs significantly. ETFs tend to have a very low MER, and a mutual fund tends to have a very high MER. This is the amount of your investment that gets paid out to the investment company for managing your mutual fund or the ETF company for managing that particular ETF. It can add up significantly depending on how much you have invested.
Yes.
So up on your screen, you're going to see two different funds. One is a mutual fund from IG Wealth Management. The other one is an ETF, XAW.TO. Both of these hold almost identical assets. Yet you'll notice that the MER for both of these are substantially different. The IG account has an MER of 2.68%, where the ETF only has an MER of 0.22%. That is a huge amount of money when it comes to your total investment. That's what gets charged on your total investment.
Yeah, and we might think, oh, it's only 2%, but you have to think about the compound interest that you are going to have over and over and over throughout those years. Even though we are using IG as an example, it does apply to all the other mutual funds available in the market, being from IG, from Edward Jones, from BMO, from RBC, you name it. All of them, they also have huge MERs. And this is the kind of question that you really need to ask your advisor. If those funds are the same, why do I have to pay more for this MER if I have another option? We did ask this question to our advisor and we didn't get an answer.
Yeah, and when you really look at these two funds side by side, there could be differences, but is it enough to validate that higher MER? That's what you really need to ask yourself. Are you actually going to see the value of that? I don't think so.
Yeah, and it goes back to you. It goes back to your profile, right? You might be saying, you know what, I would rather pay 2.68% and you have somebody looking for me.
Yeah. Just realize how much that's actually going to cost you down the road.
And just keep in mind there are fee related to both of them.
So stocks are the next one we're going to talk about. And when you purchase a stock, you're actually buying a little tiny piece of a company. Corporations sell stocks in their companies in order to raise funds. And stocks differ whether they pay a dividend or they don't. Quite often, if you're looking at a growth stock, there may not be a lot of dividend action there for you. If you're looking at a more established stock or company, then quite often they will have a dividend that they pay out. So for us, we purchase a lot of stocks here in Canada inside of our Smith Maneuver account. And we're doing that because all of those stocks are dividend paying stocks, which is a form of passive income for us. And you also have to realize, like we spoke about before with ETFs, with a stock, there is actually no management expense ratio. You only pay a commission when you buy or sell a stock.
The other kind of security that we have is a bond. Bond is a loan agreement between a company or a government, and this is the way that they use to raise money. It's similar to a loan that you get from a bank, but in this case, you are the bank lending the money to the borrower.
So we've talked about several different ways to invest your money, but the most important thing to remember is the KISS rule, K-I-S-S. Keep it simple. We'll use the word silly, but my dad always said stupid. So we just want you to be as streamlined and make this as simple as possible because it shouldn't be complicated. So the easiest way that we're going to suggest that you start your investment journey is with an ETF. And the ETFs we want you to take a look at are Global Market ETFs. They cover the whole world. So generally they're broken down into the US market. Here in Canada, they're broken down into the Canadian market, the developed markets, and the emerging markets.
And the reason for that is you're gonna buy only one ETF. So we are trying to keep it simple. You are only gonna buy one ETF. And when it's time for you to buy, how many options do we have? The Canadian market, as of today, that you record this video, there are more than 700 ETFs. And you might think, how am I gonna decide which one do I need to buy? There are a few things that you have to consider. I wish we knew what we're recording now. The first one is there is usually two big companies that you always hear about, BlackRock and Vanguard.
There are different ones, like each of your individual top 5 banks are going to have their own set of ETFs, as well as there are other companies out there, the Horizons and stuff like that. Just be very careful, take very good looks at your MERs and what's being held within these ETFs.
And this is something that we are going to talk just in a few seconds. The second topic is your risk tolerance. On the previous video, we did mention that a questionnaire that you can go and take a look and see what kind of investor you are. You are gonna always end up with something that it's a combination of stocks and bonds. And it might be you are a moderate, meaning that 80% of your asset allocation it's gonna be in stocks and 20% in bonds. Or you can be aggressive, thinking about the time horizon that you have, which is, for example, 100% invested in the stock market.
So we're going to just take a look at 100% equity ETFs. We're going to compare 2 of them, so just take a look at this. So we want to actually just compare side by side 2 of these global funds that we've been talking about. One's going to be the Vanguard Fund VEQT. So here we are in Vanguard's site, and we're going to first and foremost search for VEQT. Vanguard has a really cool tool that allows you to compare side by side different ETFs, and that's exactly what we're going to do here. So we pulled up VEQT, and we want to compare that to the BlackRock Fund, which is XEQT. So we're just going to type that in. We've already searched for it before. And now we have both of them side by side. One is going to be the Vanguard ETF, and the other one is going to be the BlackRock ETF.
So when you see, every time that you see iShares, you're basically saying BlackRock, but that's how they brand themselves, the list of ETFs. So what else can we see here? We know that this is a global equity ETF, right? And one of the important things for you to consider is the MER. It's 0.24 against 0.2%.
And those are pretty close. I mean, it looks like obviously Vanguard is slightly higher, but really it is just a slight difference.
Yeah, it's not gonna move the needle at all. I don't see it. So 100% stock, that's
their allocation of their assets.
Thank you. Let's scroll down. The other thing that it's also important is the top 10 holdings here. So we have 1 to 4, which is basically the 4 different, let's say, asset allocations where we are investing in, which is basically the US total market for both Vanguard and iShares and BlackRock. The second one is Canada, both of them. The third one is developed country X North America. And the fourth one, the emerging markets. So we see 4 of them, but we are basically seeing 4 ETFs within this ETF.
Yeah, so if you really wanted to, if you only wanted to, say, invest in the US total market, you could actually go and search for that number 1 holding in either Vanguard or iShares. And similarly down the list, if you wanted to do all of Canada or just developed markets, whatnot.
Yeah.
And here you can see the basic breakdown of the different sectors that the investments are held in. And they're almost identical. There's really not much difference between the 2 funds.
Yeah.
And if you keep going down, you're going to see, and here's where we talk about market allocation. And this is where you see all the different countries that you're invested in within this particular ETF. And if we scroll to the bottom, it's a pretty long list. You're going to see that in each one of these countries, there's a smaller and smaller percentage of investment. And as you get to the bottom, this is where you're going to have your emerging markets. So it sort of goes from US to Canada to developed countries to emerging markets.
Yeah. So that's basically it. As long as you decide which one, Vanguard, it's a really good website that you can look to compare ETFs, and it doesn't have to be only this one. It could be any ETF that you want to use too.
And you can do up to 4 at a time. So play around with it. It's just a good tool to have and use and help you decide what you want to invest in.
Sounds like a plan.
All right, so now you know which ETF you're going to buy, and it's time to make your first trade. So in this example, we're using XAW only because that's the one that we invest in for our own reasons. And we've already made a little video about this. So we're going to show that video now, and it's going to show you how to make your first trade using Wealthsimple.
And you can see how easy it is. You are going to be able to do that in 1 minute. Here we are, February 2022. As you know, $250 every month in my Wealthsimple Trade Challenge. So let's go. All right, it is time to buy. As you can see, I am on the Wealthsimple Trade app. I'm gonna go to More and select Activity. You can see that on January the 24th, I have deposited $250. Now it's time to buy. Go back to Trade. And from Trade, select this ETF, which is BlackRock. So the price is $34.38. I'm gonna buy this on my TFSA. Instead of market buy, I'm gonna use limit buy, which basically means that I'm gonna use this price to buy this stock. So I'm gonna say 34, let's say 38. Continue, and how many shares can I buy? I think it's gonna be 7. And the estimated cost will be $240. I'm gonna continue, confirm, and confirm order. That's basically it. The order is sent and I am good to go.
So just to summarize everything that we've sort of talked about, you want to take into account all those steps from the previous video. Once you've figured out where you're investing, the type of account, the next thing you're going to decide on is what you want to invest in. Is it ETFs, stocks, bonds, mutual funds?
The next step, you have to fund your account, which is basically transferring the money from your either savings account or checking account to the institution.
The next step, you make your trades. And we are going to recommend that you set up an ongoing bi-weekly or monthly debit from your account into your investment account. This way you're really paying yourself first and you're never going to miss depositing that money. Lastly is...
see your money grow.
Yeah, have fun investing. This should be a fun thing. Sit back, make your investments, and just watch how that compound growth really takes effect. You're going to be surprised.
Are you still there? We hope that we are, so thanks for sticking up to this point. And a bonus that we did mention at the beginning of the video, look at the description below. There is a free guide that you can download to you. Go and click on this link and you're gonna be able to see a guide with everything that we have explained up to this point, since the beginning until it's time for you to start making money.
Yeah. We hope you guys enjoyed these 2 videos. Let us know in the comments down below, and also let us know if there's something that we didn't mention that you think is also important to share. We hope you guys are staying well, and we'll see you next week.
Stay safe, take care.
Bye guys.
Bye.
Find your center. Find your center. And go. Go. The next one is a mutual fund. Mutual funds are very similar to ETFs, where they are, again, a basket of securities. They hold multiple different... well, basket of securities.
Yeah.
Right? Yeah?
Yeah. The battery is kind of almost dying. It's already 31 minutes.
Okay.
Holy shit.
Then,
Okay. Amor.
picture time. Ready? Oh my god.
What?
Tweaked my shoulder. Getting old. Which one? No, you do something fun. That's not fun.
No.
That looks sad.